a lot of lenders don't understand what investors are looking for, and they have a harder time possibly with it because if you think about it, lenders a lot of times are what we call shopped in the market, where everyone is looking for the lowest interest rate. And when you're a real estate investor, you're not getting the lowest interest rate because you are more of a risk to the servicer or the lender, the bank, than you would be if you were owning it as a primary residence.
That's
So
right.
I don't know if it makes an uncomfortable feeling for most lenders to offer or try to talk to investors knowing that it's a higher interest rate. I'm not sure what their thought is. My thought is, you need to leverage your money and get it to work for you. It
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey, folks, welcome back to the show. Today's guest, Kathy Vasel, is an investor and mortgage advisor in Massachusetts with Cross Country Mortgage and is also passionate about helping families grow their wealth through real estate. She's also been featured in Boston Magazine and Top Agent Magazine. Kathy, welcome to the show.
Thank you very much. It's nice to meet you all.
Yeah, nice to meet you as well. And I always like to start off at the top of this show, Kathy, by asking guests really how they got started in real estate.
That's a great question. That's a long time ago. So we got started in real estate. I say we, meaning my husband and I, because I actually was a salon owner at the time, a top 200 salon in the nation. And my dad he financed it for me and wanted to retire. So I decided that we needed to sell. And when we were selling, I was like, okay, what am I going to do once I sell? Because, when you're a business owner versus a regular hairdresser, you just don't make as much money as a hairdresser. So we decided to sell. And I was like, okay, what else can we do? And I said, let's take the money and invest it in real estate. And so that's kind of how I got more involved in real estate. When my husband and I got married, he actually owned a rental property. I hated it. But then I started reading all these books by, oh, what's his name? Rich Dad, Poor Dad guy.
Yeah, Robert Kiyosaki. Yeah.
Robert Kiyosaki. I read all of his books and then I was hooked. So that's when we took the money from the sale of the salon and invested in real estate. And that's how I got involved.
When I think about the salon space, there's actually a lot. And you may say, Dylan, I didn't even think about that. Or, maybe I'm off point here. But I think there's a lot of overlap between the skills and what makes a successful salon and the skills and what makes someone successful in real estate. And I'll give you two things that come to mind.
Hmm.
Number one is that just because telling people, hey, I own a salon or hey, I'm a realtor, doesn't mean they're going to come to your salon, doesn't mean they're going to trust you with being a realtor, in your case, a mortgage advisor, right? It takes a certain level of marketing, your inner sphere, but then also, connecting the dots and that level of trust. going from that salon space where you had a successful salon into the real estate mortgage space, did you feel like it was a totally new thing, or did you feel like, okay, I've been a business owner here before, there's a lot that translates here?
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Yeah, I mean, you are right. There's a few more things too to talk about. Like if you're touching someone's hair and you're like cutting it, it's like you have like the license to actually physically touch them. The only other people in the world would be a doctor. And you learn so much about someone when they're sitting in your chair. And I thought that that was, a peek into their world. But when you become a loan officer, there's just so much more that you learn about a client and their goals when you are basically stripping them and finding out about all of their finances and how they want to grow their wealth. So there is a deep connection on, people's personal growth and their desires, and so there's definitely that connection as well.
You know, the loan officer side, and I tell this to all the loan officers who I have on the show, I say, I don't necessarily regret getting in as a realtor, but sometimes I think, well, I might have been better off getting in as the loan officer because it starts and ends with that. I mean, I can't go show somebody homes, especially now with the way things are, until they're got some type of pre-qualification happening.
That's right.
So did you know going in, hey, I'm going to get in on this side because this is, I don't want to say more important, but it does feel that way. So I'm not going to go the route of, being a realtor. I'm instead going to go the route of helping people get financing.
No, I actually didn't even think about that piece of it. I'll tell you how I got from the owner of a salon to the real estate investor to becoming a lender. My niece was a lender, and she actually was like, "Why don't you come over to my house and I'll show you how to become a lender?" I told her I would be awful doing that. And she said, "No, come on over, I'll show you." So she showed me, and I loved it. And I became a lender, and she ended up becoming a hairdresser. So we swapped.
Did you help
But
her at
what,
all with guidance as far as the business?
yeah, a little bit. But the funny thing is that you said about the realtor, I considered becoming a realtor and not a lender. And I just couldn't do it because there's no way I could show people homes and go in basements. I just
Yeah.
wouldn't want to go in basements. So that's why I didn't become a realtor.
The East Coast, especially the Northeast, that's the thing. There's really not no basements. I shouldn't say no. There's very few basements in Texas where I'm licensed, but yeah, there's a basement everywhere you go. And the
There
thought
is.
process is like, well, these homes are having to have a deep foundation anyhow. In a lot of these areas, they have to have a deep foundation. So you might as well have a livable area down there. And you know what's interesting, going back to the point of being a loan officer, is there's all this, I would say, frenzy, and it seems very attractive to be a realtor, and you've got reality TV shows, and it seems like this wonderful thing. We need as much of that in the lending space because we need more lenders, I feel. We need more people to glamorize the lending space because truly the deals live and die starting with, can you get an approval? And if your lender says no,
Mhm.
a lot of people feel disheartened and then they may give up for a while.
That's true. I mean, I don't know if we need more lenders. I think that we just lost a bunch of lenders due to the fact that they came in during COVID and it's not as easy to get the business anymore. But I can say where I work now, we have every single loan product here in America. So pretty much. So I don't have that problem that other lenders may have because we have such a wealth of products.
So This is something that I've noticed. You're one of the first people that has mentioned this, really a wide spread of what you can offer. I've seen this that lenders typically fall into I work with investors, I work with retail buyers, but very, very rarely do they mesh between both. But you work with both. Do you have an idea as to why there is this separation between, lenders who work with the investors and why there's folks who don't?
If you're looking for consistent, high quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
I think that a lot of lenders don't understand what investors are looking for, and they have a harder time possibly with it because if you think about it, lenders a lot of times are what we call shopped in the market, where
Yeah,
everyone is looking for the lowest interest rate. And when you're a real estate investor, you're not getting the lowest interest rate because you are more of a risk to the servicer or the lender, the bank, than you would be if you were owning it as a primary residence.
that's
So
right.
I don't know if it makes an uncomfortable feeling for most lenders to offer or try to talk to investors knowing that it's a higher interest rate. I'm not sure what their thought is. My thought is, you need to leverage your money and get it to work for you. It To me, it doesn't matter if it's a low interest rate or a high interest rate, as long as that real estate investor is making the money, that's that's what you want to do.
Yeah, I mean, look, it's an investment. It's why would you invest in real estate at all if you have the option to put in like an index fund? It's because it's
Exactly.
manageable. You can have some more level of control over it. Sure, there may be greater risk, but there's also greater reward. I want to pivot a bit here, Kathy, and ask you about what I've seen as this trend. I wouldn't say across the board, but I do see this happening more and more. Products from the investor world seem to be making their way into the retail world. The biggest one that I see is DSCR. I was speaking to
Mm.
some very, retail focused, don't work with investors really at all, to my knowledge, type of lenders in Texas. And even they had DSCR. So how did this trend happen? And are we going to see more of that?
So I think it might have happened because so many, I mean, I don't know for fact, but I think personally why it might have happened, or professionally my opinion would be because so many home buyers have been scared to buy a home that the lenders were looking for another resource of income, so that's why they were turning to products that would appeal to the investors. um, the DSCR loans are attractive to investors because they don't have to provide tax returns involved when they're buying the property. So they could literally, if they're self employed, which most of them are, they have this income coming in. The reason why they're self employed is normally to be able to have write offs and not pay a huge chunk of change in taxes. So they're writing off a lot of their income and then they don't qualify for a normal bank loan. Therefore, they need another type of product to get qualified, and that's where the DSCR is one of the options to come in. So I think that's why a lot of the lenders are starting to bring it on. The difference is, I have to say, sorry to interrupt you,
That's okay.
but the difference is, so cross country mortgage where I work, we own our guidelines to all of our like portfolio products like DSCR, and the other lenders, they have to broker those loans out. So they lose control of getting that loan closed and processed, which is not good because it can delay things and just frustrate the buyer, the
Mhm.
the seller, and the two real estate agents if there are involved. So it's just a much cleaner process when
Right, right.
we can own the guidelines.
When I've talked with lenders about the different types of loan officers and brokers versus direct lending. Some of these terms, even to me as a realtor, seem confusing. To the general public, they just may be kind of lost upon this. Can you break down, you mentioned these guidelines, really what that entails and what's the difference between what you're doing and what other folks who are not in the same guidelines are doing?
As far as a guideline perspective, or as far as the
I guess break down first what that is for folks who may not be familiar with it, and then also to,
okay.
what other people might be doing that's maybe different or can be capped in a way limited from what y'all are doing.
So the guidelines would be how to qualify a borrower and or a property. And so when you, as a mortgage lender like myself, if I have to broker that out to a different company who's going to underwrite the loan, it creates less control of the process. And you really don't have the ability to get an exception if there's like a little tweak to be made to get what I call a good common sense loan to get it approved. They still may not approve it because we don't own the guidelines or they don't own the guidelines and so they can't get the exception. Internally, when you own the guidelines, we can get exceptions the majority of the time because they're just more apt to give a yes. So that would be the difference as far as brokering and not brokering. Um, but as far as the guidelines are concerned, we can actually get more flexibility to get a client approved for a home, even with the DSCR loan product.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
I want to pivot a bit here, Kathy, and ask you about the multifamily space. I've seen
Mhm.
more and more interest in multifamily, not just because of, the potential cash flow opportunities, but also because from what I've seen and heard, there is a fair degree of distress on the operator side in some of these smaller and then larger multifamily properties. Do you have any experience in multifamily, and what's your perspective on, what may be happening in the multifamily space right
I think that I'm not really sure of what you're questioning me, but so I'm going to try to answer you. Are you like asking me, reword your
now? Let me
question? So
reword it. So
thank
I
you.
can speak, and maybe there's a different trend happening in the Northeast, but in Texas specifically, got a lot of vacant land, right? And so you're seeing right now there's been a lot of new developments, a lot of multi-use facilities, but then also a lot of commercial residential apartment complexes and the like. And this seemed to really just boom 5 or 6 years ago. And so people were creating funds, syndications, and investing not just in large apartment complexes with hundreds of doors, but also in units and complexes that maybe had 50 doors or less, maybe 25 doors or less. But all the way from the top of that down to, a single owner who may have, several townhomes. I'm seeing that there's some distress, both because, there may be, adjustable rate mortgages that have gone up. There may be rent issues. They were predicting rents to increase and they've, stabled off, if not gone down. But then also a lot of their
Mhm.
exit strategies for their investors were, hey, we're going to, exit this deal at 5 or 6 years. And it's now that time and they can't because they don't have the equity to do so. Do you have any experience working with those type of investors? Also, what's your perspective on multifamily in general?
Okay. Now I understand better. So a lot of it, what you're talking about is more commercial, and we do less commercial. I'm more involved with residential. However, I will say this market in the Northeast is very strong. We hold our values. And so I could definitely see in Texas or in the South or even out west, there's a lot more probably of what you're seeing in regards to that concern. But here, there's just not as much of it. There are commercial buildings that have, since COVID, been vacant. We're seeing some developers going in, like for example, Littleton, Massachusetts. There's huge IBM building, and they're going to be putting in condos there with a whole kind of like resort feeling of stores and such. So I do see that happening. I don't know if that answers your
No,
question.
yeah. I'm always curious to get people's perspective on this because, especially as an investor agent myself, sometimes
Hmm.
I have folks telling me, well, should I buy, a short-term rental? Should I look for a heavily distressed property and flip it? Should I go quadplex? My friend has a syndication that he started in Houston, Texas. I'm thinking about, being one of several people who own several hundred doors. And so there's so
Hmm.
many options for people to get. I mean, in the business. You talked at the top of this show about how you got in on the rental side and didn't necessarily love the business there, but have since changed. For folks who may be looking at making that first investment, my feedback has always been you have to find the investment that works with your schedule, that works, even with your personality, right? It may not be best
Hmm.
for you to have an Airbnb if you don't necessarily love the idea of turnover and cleaning and like being a host, so to speak. What's your perspective
Exactly.
on, folks who may be looking for that first investment and how to correctly guide them?
Right. And so a lot of it too is based upon what are their resources. So, meaning what they want to do may not be what they're able to do. They may not get the financing on something that they desire to do because it might require more money down. So, an Airbnb, like you said, it's going to require that daily or even sometimes, weekly, depending upon the stay of, the cleanup. And or they'd have to hire a management company to do that piece of it. So we could definitely connect them to management companies and introduce them. But there are fees involved, so that will reduce on their income. And so it I think it's really, you know, talking to each and every person as they come in and finding out what are their desires and then what is their ability so that we can discover, you might want to buy an Airbnb, but you need more money down. You don't even own a home yet. So let's first start you with buying a multifamily and you moving into one side. There's a
Exactly.
lot less money down. You can rent out the other side and then you can become a real estate investor. That could be your first step if you have less money to put down versus just trying to jump in as a real estate investor doing an Airbnb. And then they could grow into that next step. They could go and buy another property and move out of that multi unit. So there's different, I think the interviewing of the client and finding out what their desires and what their ability is really what the best avenue is, in my opinion.
Yeah, yeah. I think there's so many ways for folks to get into real estate, and it doesn't have to involve you swinging a hammer. It doesn't have to, if you don't love the idea of evictions, then maybe
Exactly.
that might not be the avenue for you to do. You might, on the other hand, love being a passive investor as part of a fund or something along the sort of this. But I do want to ask you about scaling a business as a loan officer. And then also too, you've been in the business for several market cycles, right? So folks who joined in 2020, you mentioned they're out of the business now, but folks who were in earlier, they've seen some trials as well. What's your perspective on how folks who may be newer loan officers can weather different markets? And then also, do you have any advice for how they can scale their business even in times like
Mm. They have to be able to be like a leprechaun and just go with what the market is bearing. So when I first got in the business, it was extremely tough as well, but we were all about doing short sales. People didn't have equity in their homes to be selling them. So I fortunately knew about short sales because I was a real estate investor, but they just have to learn whatever is, going on in the market in their area and adjust to that. Um, for example, I'm learning all about Chat GPT and AI, and I'm not like in my 20s, but I am adjusting to learning about it because I know these younger lenders, they know Chat GPT and AI, and can adjust to that more easily. So it's basically learning their craft and adjusting to the markets and knowing their direct market in their location is going to be different than another market
That's
in
me.
another state.
Yeah, I mean, look, if I compared, the entry cost of a new homes in Dallas, Texas to northern New Jersey, where I'm at right now, or to, the greater Boston area, we're talking about three totally different entities, three totally different
Mhm.
worlds. But at the same point in time, you need to have not just that local knowledge of, hey, here's the, assistance programs that are available, but you also I would imagine it helps to know, the trends. And people oftentimes say, well, this is what the realtor does, this is what the lender does. But in my mind, especially having the interactions that I've had with some really good lenders, a lot of the lenders are really thinking like realtors as well, knowing the areas, having a vested interest in seeing the growth and the production of these areas as well. So, I mean, a good
Mhm.
lender is invaluable.
Exactly. I agree. Yeah, one of the things that I do when I get a client pre-approved, I take them through a PowerPoint presentation and I'll show them what's going on in the market because when they make an offer, if they haven't made any offers and they start making offers and they're not aware of what's going on, they're never going to win an offer. They're just
Yeah,
going to be upbeat.
that's a real thing. I mean, I'll tell you what my real estate team told me this week is, you have to prep clients that, if we're listing the home right now, let's have some reasonable expectations. We have to treat every offer as if this is the only offer that we're going to get. And so, if you're not telling that to your clients in Texas, hey, these two offers, if we get two, these might be the only two, you're really doing folks a disservice. Yeah, it feels good to get that listing, but if you're not prepping them for the reality of the market right now, then it's not just going to be unfavorable to them. It'll be unfavorable to you because then at the end they'll be upset with you. You might as well have not gotten that listing at all.
Exactly. I agree with that. And again, this is what you said, a good lender comes in play because the lender is going to explain that also to the client that for the buyers. So when they make an offer, they can help them win the offer, but they might have the seller as well knowing, this is how we can structure your future purchase as you're moving out of the home that you're selling and, this would be your bare bone minimum price that you can take so that you can get to your next journey.
I want to ask you, and without giving away all the gold, Kathy, because this is a really, I'd say, a helpful conversation for a lot of buyers. How can a good lender make an offer which could help facilitate that deal? Because I'm thinking as someone who might not know how that would work, I'm thinking, well, I could get a lender. I'm approved. I could get approved from another lender. How is the lender going to advocate, for me? Isn't that the job of my realtor? So explain to our audience what a lender can do to facilitate a deal.
Sure. So I work with my realtors to help get the deals or the offers accepted. I call the listing agents. I guarantee my pre-approvals. When I guarantee them, I do have everything that I need to get the offer accepted. And I am asking the listing agent, where we are in the mix of the offers. And so if we need to tweak the offer, if the listing agent is giving us any information, I'll go back and tell the buyer's agent and the buyers so that they can tweak their offer if they choose to. So that's one way. But the other way is I literally had an offer accepted, and the listing agent wanted to know why my buyer wasn't putting down more money, because she knew she could have, because she was qualified for more. And I said, well, she chose not to put down more money because she's going to be using that for any upgrades or repairs. And so just explaining that information to the listing agent, it's it's helping them understand what the scenario is and makes them more comfortable to accept the offer.
Yeah.
So that's how I basically get it accepted. And when I guarantee my pre-approval, it makes them feel a lot more comfortable knowing that I have all recent documentation, and I get 90% of my offers accepted with what I call a good offer. And a good offer is defined to me as an offer that you're working with your buyer agent to put the offer in at a certain price with certain terms. And
Yeah.
so, for example, if the buyer thinks they should offer 600,000 for the property without an appraisal gap guarantee, and the buyer agent thinks that you should offer $620,000 with an appraisal gap guarantee, I don't call that a good offer if the buyer is not going to listen to the buyer agent.
That's right. I mean, I can't tell you, Kathy, how many times in a different segment of real estate, I was working with fix and flippers and the distressed property state segment in Texas. I would have a property under contract. This is me pre getting a real estate license. I was a wholesaler at this point in time. I would have a
Okay.
property under contract, and I would want to speak with the buyer's lender. I would say, look, I hear what you're saying. I like you. I don't have any issue with what you're telling me, but I want to be able to speak with your lender because I don't want something last minute to come up a week before close or a couple days before close, especially because in this space, it was high stakes. Like this person could be losing their home. They might need to move imminently. There was a reason why they were opting for a cash offer versus something else. And
Mm-hmm.
it's interesting because there was a lot of resistance in many cases. I don't want you to talk to my lender. Oh, this and this, or the lender doesn't do this and this. And so hearing you explain, hey, I call the listing agent, to me as someone who's worked with sellers and worked a lot with buyers and lenders, it is a no-brainer. Of course, that's going to make a big difference. Because imagine I'm the listing agent or I'm the person selling my home, and I find out not only did this person submit an offer, their lender called us directly and explained to us, this is exactly what's happening. This is a serious offer. We should, take a lot of consideration into this.
Right. And like I said, I can't give any, or lenders can't give any personal information, but we can give general information. Like I say, they're a slam dunk. We have all the documents, so that's very helpful. Additionally, if we can close loans in 16 days, so that's very appealing, especially if you're a real estate investor selling the property. Time is money. You want that closed as soon as possible. So that's another advantage. I mean, really for anybody. But if you're a real estate investor selling a property, 16 days is as fast as cash almost.
Yeah, I mean, that's pretty impressive. Kathy, we are coming up on time here, though. Where can
Okay,
folks go to reach out to you? Maybe they are interested in purchasing a home for themselves or investment property. Maybe they are a loan officer themselves and would like some feedback based on your career. How can folks reach
absolutely.
out to you?
The best way is through my phone. So 978-502-2998. They can also Google me. It's Kathy with a K, and then it's Vasel, V as in Victor, Asel. But the best way is really my cell phone.
Kathy, thank you so much for coming on the show here today.
Thank you very much. It was a pleasure. It was really nice meeting you and talking to you.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.